Good morning.
Good morning.
Morning.
Hello.
Good day,
Yes.
different time zones.
Yeah, it should be a panel about KYC, about identity. Yes, will you please introduce yourself? David, maybe start, yeah.
And do we have a moderator, or would you like any of
us?
Yes.
Yeah. Will you please introduce yourself?
Everyone just introduce themselves. Okay.
Yeah.
David Blumberg here from Blumberg Capital. We're based in San Francisco. We're an early stage venture capital fund. So we lead seed and A rounds, typically between $500,000 to $5 million. Most of our investments have originated from North America, US, Canada, and Israel. We've done some in Europe as well. Although the catchment basin is open, great entrepreneurs are free to contact us, blumbergcapital.com, from anywhere in the world. We typically invest in things that are generally enterprise focused, a lot of artificial intelligence, fintech, which obviously relates to this panel. Invested in several companies in this specific domain of KYC and automated identity verification. So we'll discuss that. And then just broader, I think, again, the combination of AI and big data riding the internet rails is really revolutionizing almost every branch of industry. And this is not an exception. So with that, I'll just say welcome to the crew, and it's nice to see all my old friends again. Soon we'll be able to meet in person.
Yes. Hello, Jorden.
Hi, Manana. How are you?
I'm fine.
Great. Yeah, happy to follow up. David, we met, late last year, so at the Tomvest event, and so we're also here in the San Francisco Bay Area. And we have, with StarChain Ventures, StarChain Ventures is a venture studio. We're very focused on advanced technologies like blockchain, AI, ML, IoT, and their applications in various sectors such as fintech, as well as health tech, which has become very big, obviously now during the pandemic, and also supply chain. So those are the three primary areas. We just published a book late last year called Enterprise Blockchain Has Arrived. So also very focused on the enterprise, co-published, co-authored with my co-author Radhika Iyengar, and who's also going to be on a panel later today. Very much also focused on digital identity. And what we do is we spin up companies, and very focused on all the latest trends, and happy to be here. So looking forward to the questions. Nice to see you.
Hello, Mihaela. Yes, hello, Mihaela.
Hi, yes, good to see you again. I mean, on the upper row, we all met in Davos. I look forward to the next one. Let's hope in person. I'm Mihaela Ulieru. I think for the purpose of this panel, to keep things short, as a member of the World Economic Forum Global Agenda Council on Data-Driven Development, I proposed to add blockchain to the top 10 in 2016. And since then, we have a council on blockchain and so on and so forth. I'm also an advisor to several startups, including to SFB Technologies, which is the creator of the Sovereign, the first fiat currency on blockchain, which is also called a blockchain with identity. We will dive into this later on. I also am advising SingularityNet, which is an AI, obviously on blockchain company. We're going to talk about that as well in the context of better AML and so on. Thank you.
Okay. Steven, hello.
Hi, Manana. How are you?
Yes, they're fine. Waiting you, actually.
Okay, thank you.
Will you please introduce yourself? And they want to talk about KYC today.
Great, thanks. Steve Munford. I'm the CEO of Ulieru, and we are an identity platform for people for KYC, KYB, AML online.
Okay, great.
He's much too modest. He's also the former CEO of a public company that's in the security realm.
Yes.
A lot. Man,
Thank you for coming. Thank you for coming, guys. Thank you. Okay, and Yuri.
Hello, guys. My name is Yuri Myshinsky. Glad to see you. Glad to see you, David. We met and had a productive conversation in Davos. I'm the founder and director of a company that develops a product based on blockchain, cryptography, and mobile development. Our solution called Multipass. This is a technical solution in field of KYC. We specialized on the safety, and we create a secure solution for like mobile wallet for personal data. Now we have a company in Switzerland and in United States, and I'm very happy to see you. Let's talk.
Yeah. Okay, guys. My first question: what is the next big thing in finance, in KYC, after the COVID? David, definitely, you shall be first, please.
I'll start as a venture capitalist, seeing a lot of things. So I'm an expert in nothing, but I'm a generalist. So we have a lot of more specific expertise here. They'll go later.
Please.
At the high level, it seems to me that it's very dangerous in investing to say this time it's different. However, I do think this time it is different. We don't have just a crash and recovery scenario. I think we have an acceleration, a catalyzing scenario, moving us more toward what we call the advent or the era of the virtual enterprise. More distributed, more flexible, more dynamic perhaps. And to this specific realm of identity and cybersecurity and compliance, they're all together, they're related, they're parts of maybe a diamond with different facets. So we have the compliance pressure on especially the big corporations, but increasingly spreading down to small businesses as well, from the state level, the federal level, international level, very complex. So we have that pressure and threats of fines and even imprisonment for particularly violating issues of privacy, but there are many other regulations. Then we have the growth of the cyber, let's call it the vectors of attack, because the attack surface has fragmented and splintered. We don't have big office buildings with on-premise networks to defend now. We have multinationals spread all over the world, people working from home, all kinds of new scenarios, and the ability for the attackers to wreak havoc is really probably never been easier, and so on. And then we have this issue of risk management, and I think it's going to require a lot of coordination of traditional IT skills of making orchestration more prominent, having the taking account of the shortage of personnel, especially in cybersecurity. And I think Stephen knows that from his times in the Sophos world. The SOC, the Security Operating Center for most companies, is just understaffed everywhere in the world, and we're not producing enough really high talented cyber professionals. So we have to do more automation, more orchestration, more coordination with the compliance regime, and then this idea of identity. And I'll throw out one more bomb hand grenade into the factor, and that is that the increase of hacking of large database sets is starting to render some of the data that we've thought of as reliable as perhaps less reliable. And so we're going to probably need to move to something that combines traditional KYC, AML, identity verification checks, with something that also is validating the human is actually that person. So something maybe passive biometrics or some other type of validation of data and person in a durational sense, not a login, but through the whole medium and time frame that we're connected to a transaction or to a relationship. I'll pause there. It's a lot of different things, but it's an exciting time to be an investor. It's an exciting time to be an entrepreneur. It's risky, but there are great opportunities in times of risk. So, carpe diem, so seize the day.
So okay. David, I think you picked up on, or go ahead.
Sorry, go ahead.
Yeah, I was gonna say, I think maybe on two themes, and both actually, a lot of it comes down to identity, right? So if you think about cybersecurity and this distributed organization, fundamentally, the only way you're going to secure it is by, validating someone's identity and allowing them access to only things they need to have access to. So risk mitigation by not allowing them into a whole corporate network and that sort of thing. So there's this real challenge of identity, and not only identity, but mapping that to what applications, business services, databases that they get access to manage the risk. And I think the trend that certainly at Truly we're seeing with COVID is that it's this real acceleration of people becoming digital first. And for that, they can't rely on in-person identity or a lot of the traditional ways of people coming in and validating them before they do business with you. So I think as companies get more distributed, as businesses learn to do everything online, how do they build that trust with this individual that they don't know, that's not in their corporation or their sphere? And that's identity, again, becomes a critical part of that problem.
Yeah, maybe I'll follow up on those.
Yes, please.
Two discussion points.
Mm-hmm.
So, maybe to put in some numbers, everyone's always very excited by the big tech companies, and their combined revenues are not quite $1 trillion. If you look at cyber fraud or, all the online fraud that takes place, it has breached $1 trillion and is on the way to around 2 trillion. So it's actually a much larger ecosystem than what we see as big tech. And if you look at the amount of and the growth of fraud online, it's actually growing faster than big tech or startups, even though it has such large numbers. So to David's point, the fact that we have this 18 to 24 month acceleration, and Steve was talking about people becoming digital first, this is a great opportunity for all those who've been trained in cyber and online fraud to really accelerate and amplify their business. And the reason that there is so much is because we have a lot of centralized systems which are fundamentally insecure, right? You have a single point of failure. And identity, even though we're in a centralized world, is actually fragmented and it's distributed. Wherever we go in order to log in, we do not control our own identity. We have an identity that's given to us by a centralized certificate authority, which is owned by a company, which is actually quite easy in many cases, as we've seen. There's over 130 major attacks and successful cases of large corporations being breached. And it happens to all the largest organizations that are out there. So as we become digital first, and we have these distributed identities, which are centrally controlled, you have the ability for cybercrime to accelerate even more. So the really good thing is that decentralized ID and blockchain is actually made for this world, made for this digital world. And this layer of trust between non-trusting or entities that do not know each other is, we already have the tools. They just have not been implemented yet. So from the point of view of venture, this is an exciting time because we have the ability to remake this centralized, distributed identity system that is clearly broken and is going to become more broken with a decentralized system based on a trustless infrastructure, which will enable us to actually be much more secure in terms of this digital first. And there are companies, Mihaela talked about sovereign network, but there's a lot of different digital identity or decentralized identity initiatives, as well as self-sovereign ID, where we actually control, and that's a whole different issue, right? You're talking about first KYC AML, know your customer, and then anti-money laundering. You really have to have a sense of the identity and what the interactions are. We can talk about that more. But then just with the digital ID to start with, there's this whole opportunity to remake the way that people are identified and give us control over our data. And that provides tremendous platform in finance and healthcare, in all the regulated industries, for us, as well as with government, to create a brand new ecosystem. So anyway, I'll just leave that out there, and we can get back to many of those points, I'm sure, as we move forward.
Okay, Mihaela, what is
Yes, no, sure. And as David was saying, all business, I mean, the data conundrum is there. It's just being accelerating. I mean, the issues, especially in the context of COVID-19, the appetite for our data is so big. From my side, as an artificial intelligence background, we cannot have artificial intelligence without crunching data. The question is, how do we balance the need, the appetite for data with rights to privacy? And with COVID-19, obviously from tracking, and we had a COVID-a-thon with SingularityNet and the Decentralized AI Alliance, which was absolutely focused on privacy preserving solutions, including tracking. I mean, from my phone, you do not need my identity for me to find out that someone who was diagnosed with COVID-19 was in my vicinity, let's say 2 days ago. So I can do that with mobile technology today. So finding innovative ways around let's say this identity and identifying while preserving privacy, as well as finding innovative technological solutions like homomorphic encryption and the ability to process encrypted data, which is becoming more and more prevalent, and there are solutions that are being deployed in this regard. So we can actually personalize treatment for a patient and then extend that to other patients which are similar without identifying the person and using only the data which is needed, or without the ability and sharing data between people without anyone knowing where that data, to whom that data belongs. So this is a bit the opposite of KYC AML, is also the need to preserve our privacy in the whole in this big picture. So I will let my colleagues talk about the other way around, and then I may step in with that as well.
Okay, and Yuri. Sorry, you are on mute.
Thank you.
No, sorry.
I fully agree with my colleagues on security issues, and I would like to ask you a question to clarify positions.
Wow.
What do you think about the idea of combining the capabilities of traditional KYC companies such as Trulio or Onfido with blockchain-based software solutions that allow people to feel more secure from large corporations where data is constantly being leaked? At the same time, such solution will not compete with KYC companies, but will add something like the last mile to them, and will add freedom and security to users. And of course, how do you evaluate the possibility of a serious reduction of time for KYC procedures in this case?
Great question.
Yeah, and one I'd have to kind of go a little deeper on how that could happen. So I'm not sure if this is this panel, but that kind of sparks a bunch of questions of how that would be done. So, I mean, currently with Trulio, we actually don't hold anyone's data. We're just a broker between someone that's consented to do an identity check and the people that hold that person's data and doing a match, but no one actually sees the data. So I'm trying to, how would blockchain help that or make that more efficient?
Well, maybe I can jump in. So I think in terms of the credentials, right? The credentials are usually provided on a blockchain to make sure that they have not been tampered with, and that they are usually what you do is there's a key, private key, which is owned by the individual, which you can authenticate to, and then that authenticates to your actual identity credentials, which are digital. So the issue that you usually have is you have weaknesses around authentication, right? So if someone is passing you credentials in a traditional system, those credentials may be real, they may not be real. And if they're on a blockchain, you know that they're real, you know that they belong to someone. And then if you have correct cryptography or the ability to actually authenticate in a verifiable way, usually with a biometric or in some kind of multi-factor way, then you have a pretty high, the verifiability of that person passing you those credentials is pretty high. So the blockchain, because it is immutable and it's also decentralized and it's also transparent, right? If you look at most of the networks that provide DIDs, right, decentralized IDs, they are networks that include the credential holders as well as the verifiers. And so this infrastructure is much more transparent and is much less, due to its transparency and immutability, it's a lot more reliable than the existing infrastructure. Going to on FIDO and FIDO, we do need standards, right? If you have a proliferation of a lot of DIDs that have different standards, every organization putting out something different, it's going to lead to mass chaos, right? And you're going to get back to what we have today, which is that every organization is issuing its own credentials to individuals. So you have to have standards. So to Yuri's point, you have to have a universal standard so that all the different groups that are putting out, that are utilities, that are providing these decentralized IDs, are putting them out in a way that's interoperable. And then if I've gotten my DID from one organization and you've gotten it from another, we can still actually have them both verified from an interoperable network. So that's what is currently happening with the Decentralized Identity Foundation. If you're familiar with that, and W3C is coming up with that standards base so that you can actually have this decentralized network function. And with blockchain as the core, it gives us a lot of the capabilities in terms of the immutability and authentication. And then to Mihaela's point, there are a lot of different forms of encryption, the homomorphic encryption, et cetera, that is being worked on in the blockchain community to take the cryptography basically to the next level. So anyway, that's my understanding, and be happy to talk about that more and get your thoughts.
Yes, and I would just say this, that the balance between privacy and this transparency, I think it's critical, but giving people control of their data, I think, is crucial. And that is what the wallets, data wallets, as we call them, can do. This is, I think, the solution in the end.
Right. So the data that's decentralized is your personal data. So where you live, what citizenship you have, your age, all that is decentralized, and you control that. So when you go to verify yourself for the first time, when you want to interact with someone digitally, you then share that data. And then how's that whole, who first validated that data is correct?
Yeah, so usually what you do is you have a verifier that's on the network, So there's, most of these are hybrid systems where you have a permissionless or public blockchain, which is transparent. And then you have a permissioned interface, a group of trusted verifiers who will verify that that information is actually correct. So if you look right now at just how we do things offline, right? Like if we're verifying our ID, we usually have a driver's license in the US, which has been issued by the government, you know, and that every interaction that we have is decentralized. We don't have to go and have the government come in every time we present our ID and, you know, have the government say, oh yes, that's accurate. Someone looks at that driver's license and makes a determination if it looks correct or not. So they're the verifier at that point. Obviously, that's open to fraud. And so by putting in another layer of trusted intermediaries who do that verification, you get a higher level of trust. And so that so that kind of offline decentralized interaction is basically what we're going to get online, right? Where offline we have our own wallet, and offline we have our own ID, right? We own that credential, right? It's in our wallet, and we're able to do with it what we want. Online, we don't have that. We don't own that credential. It's passed around with other organizations that give it to us and then verify it, you know, internally. So what we're trying to do is get the offline experience online so that, you know, it becomes a lot more.
But we also want to do it a bit better. We can, speaking of having control of our data, you know, if I have the driver's license in digital form and it is still issued by the government and so on and so forth, I want to have the right to only show you, let's say, that I am older than 18, not my age, or you don't need to see my address if I'm at a bar and you just give me alcohol and so on and so forth. So we can do much more digitally by empowering people to take control of the details which are not needed and use the data, their personal data, as really needed.
Yes.
Guys, and how it's worked for the global economy and for something sustainable after the COVID?
Yeah, I was just gonna.
And like you beyond like the plus 10 years, for example. And do you remember it was like our issues about TikTok too and Twitter yesterday.
I just wanted to move to, we've been much of our conversation until now has been talking about personal data and privacy issues, but a much larger realm, frankly, in terms of the economy, is business data and transactional data, and those data flows, which are increasingly multinational, cross-border. And we have, on the one hand, rising threat of fraud and hacking. The ability to verify an ID digitally is becoming much more complex and much lower accuracy because the hackers and the fakers are becoming better and more sophisticated, and the tools are not quite kept up with them. As the world goes more e-commerce, less verifiable in person, it's harder to verify identities. And then if it's cross-border, you're relying on generally governments which are not going to be probably decentralized and blockchain anytime soon, at least many of them. And so businesses are caught in a cross fire. On the one hand, tighter and tighter regulations saying don't ever mess anything up, never take a risk, you know. And then there's lots of liability lawsuit lawyers waiting to sue if there's any problem of a breach or inappropriate, you know, letting somebody into a bar that was too young. All these things are problematic. So all I'm saying is that it's getting a lot more complicated and the tools need to be better. I want to give honor to Ulieru, because even before blockchain was a thing, they were talking about a distributed way of verifying, because they said we can't rely on just one set of data, and we don't want to be a bottleneck for holding the data and being a source of hackers that would come in and steal the data. So they were a verification agent that would ping many different databases, aggregate lots of different data. And so it was a sort of a spider web network, not a single point of failure network. And I think, Steve and the team get great credit, and the founders who thought that through. And partly it was because people didn't want to rely on just the US network. It was after the Snowden affair, and there were a lot of companies that were concerned about that kind of traffic. So there was a real attention to keeping things anonymous, resilient, compliant, transparent, all that stuff together, and it came up with the way they've architected their network. I think it's a model for many others. But let's, if I may, since Manana, you talked originally about the business side and what are the issues here, there's a whole nother issue. Instead of personal identity, it's about business identity. For example, when I need to do a KYC of a company as a client, I'm onboarding, I might need to look at who the shareholders are. If there's a 10% shareholder that's on an OFAC list for some violation, that could be problematic for me, the vendor. So there are some new things that we're calling now KYB, know your business, where we can delve into these layers of ownership. Maybe I'd ask Steve, what are some of the latest techniques and best practices that you're seeing there?
Yeah, I think that's KYB and ultimate beneficial ownership is something that is being demanded by regulators to basically weed out money laundering and all these things that can happen. It's really hard. It is most companies, the registration of the business, the registration and maintenance of the shareholders is different, and it's subject to poor formatting, it's subject to change, and it's challenging. So I would say, what is the best practice? Best practice is you try, but I would say it is hard to do it digitally quickly with a lot of accuracy. I mean, you need to start that way, but inevitably you end up relying on lawyers sending paperwork back and forth, and that's very cumbersome. So I don't think that problem is anywhere close to being solved. It's actually much easier to identify an individual than a ultimate beneficial ownership of a company.
It does seem like it's a business opportunity. I know that
Yes.
your company's working on it, and I think that there's hope perhaps that the blockchain will start to rear its positive head. I don't mean to be talking too much. I'll turn it back to Jorden and Mihaela, who are really experts in blockchain. We're novices because it's so new. What we've been waiting for as a venture investor is not the Bitcoin world, which was really individuals adopting it for personal use. We're waiting for enterprise use cases. And I think, Jorden, that's the topic of your book, and Mihaela is deeply into this. So that area of where are the best use cases we're starting to see for blockchain. And I think this KYC of the B, KYB, know your business role may be one of the first. I think they'll need companies like Ulieru to help provide the verification, but riding perhaps on blockchain rails. Maybe Jorden, you want to start?
I will start though, if you don't mind.
Okay.
So, because I just want to take on from what other gentleman before you, David, mentioned. And it is, of course, with the latest advances of AI, we can move into a more dynamic way of processing this and a dynamic monitoring of multiple identities and behaviors. So it's something like behavioral intelligence, but an aggregate over all those shareholders, which you mentioned, David. So you can monitor those behaviors, and you can flag through that particular, nefarious things which may appear. You have models, and you can match the models with the behavioral data which you take dynamically. So of course, the models, not only the models, but the way in which we do things today, which were mentioned, are totally outdated. We are talking about the digital world and the capabilities which technology can offer today, but we are not using. So that is a different conversation, but the technology is there, and we can solve it.
I'm very optimistic about the behavioral analysis and the anomaly detection manner.
Exactly.
Yeah, I think something that is very important to realize with blockchain world is that the blockchain is actually an ecosystem-based infrastructure. It's not based on a single company or a single entity. And so what often happens in this centralized world, it's actually distributed. Everybody has their own database and everybody is putting forward credentials and people are trying to decide if those credentials are real. And, you know, and then every interaction is point to point, right? There's no history with other groups. So if you have a network that has dealt with, you know, a whole bunch of companies. So I'll throw out that IBM working with some of their partners has come up with a Trust Your Supplier network, and they've recently turned it into a Rapid Supplier Connect for COVID specifically. But what happens is you have a whole group of companies that are sharing their vendors and their experiences with their vendors on the blockchain. It's immutable, it's trusted. And so rather than, you know, someone comes to you and says, okay, I have PPE and I'm going to deliver it to you on time. What you can do is with this ecosystem-based approach with blockchain, is you can go and you can say, well, who else has worked with this vendor, right? And who else knows them, what, you know, with their credentials, because it's at root, it's an identity system. And so there's an identification of that vendor in the system. There's a digital passport. So this digital passport concept of all of their interactions with all of the other groups that are within the network is visible. And if they have a very bad rating, then you can choose not to work with them. If they have a very good rating, you can decrease the onboarding and paperwork process by about 80%. And really the idea in using blockchain is use the trust of the network in order to reduce the time and cost of all your KYC interactions. KYC interactions, when they're point to point, every time you deal with someone new, you're having to go through the same process. It can be a 6-week process or longer, and it's very time consuming and as a result, very expensive. But if people can rely on the trust of the network that you are who you say you are, and you know you are a good vendor or a good supplier, whatever, now they can avoid all of these additional interactions of going to every single shareholder and trying to figure out, you know, do you have problems with money laundering, or do you have problems with not doing what you said you're going to do? So anyway, this is the idea, is you actually use the crowd or the network, but this crowd is not people, this crowd is businesses. And it's really this ecosystem approach, which is very valuable in fighting fraud and fighting crime and fighting a lot of different things, because you get transparency across the entire ecosystem rather than on just a point-to-point.
There's other ways, like for example, if you do the certification of the person and they are, or of everyone involved or the business, and it's whitelisted, and then you monitor dynamically and see something, so your sensors notice something, they, you know, that they can bring to the fore, but they can be also blacklisted dynamically. And then when you need them, you can find out, oh, so wait a minute, things have changed there. I am all for the crowd, but on the other side, as an AI expert, I also know that sometimes, you know, crowd can build the AI, but the AI can also do more dynamic stuff. And sometimes the subjectivity of the crowds can you know, be an impediment.
If I can I want to back up what Mihaela is saying with a slant reference to another business, but it's very related. We're talking about fintech. So in our venture capital portfolio at Blumberg Capital, we have a lot of fintech companies, very specifically lenders. And specifically, it's interesting to see how some of them that are employing AI as their underwriting engine are not only doing well in this terrible crisis, they're doing far better than we expected, better than they expected. And I think it goes to some of Jordan's points and Mihaela's points about data access. And let me just give you an example. One of these underwriters uses e-invoicing system to watch the bills that you're sending out on a regular basis. Now, they also tie into the bank data, so they see when you receive the money in and your other payments and expenses. But they have more data than the bank does because they're tying into this e-invoicing system and sending out the information. So they're doing better. Their collections are better. Their loss ratios are lower. It's quite astonishing. And they're, guess what? Their lenders, the bigger lenders who lend to our firm, which lends to SMBs, are sticking with them. when they're running away from, many credit categories. I mean, goodness gracious, Wells Fargo just cut off HELOCs, home equity line of credits. And so I think AI is definitely part of the way forward. And it is this behavioral flow analysis that is I think, increasingly important. Anybody want to?
Exactly, because that can also detect if I am, officially my driver's license or my identity is in the US, but actually I've been spotted in the Cayman Islands or who knows where else doing some things with a suitcase of money, and the video analytics also are now coming to the fore. So a lot of various kind of data can be used, and it's I would say.
Yeah. I would totally agree with all the points. The really key thing is that if you have trusted data, so the blockchain infrastructure typically gives you trusted data, but then there's so much of it that no individual can actually process it. So now you bring in AI on that trusted, base, you're going to be able to make much better decisions, much faster and much less expensively. So that's really, with trusted data and AI, you actually get a much more powerful, basis for decision making.
And if I can put in one more point from the classic enterprise software realm, we need structured data. There's an enormous amount of data that's being produced. It's unstructured and it's kind of unusable in an unstructured format. Exactly. And we need to have it structured with metadata tagging and image analysis. That really has a lot of opportunity for benefit. And then cracking down the barriers between siloed data, both within the enterprise and across many enterprises or small businesses. So breaking down the barriers, not homogenizing, but standardizing, normalizing the data so that it can be structured, gives us much more powerful tools. And again, thinking dynamic, not static. Those are, I think, 3 points.
Yeah,
exactly.
and I think
here the crowd can help with the structuring as well. So
say one word.
And I have a question. And my next question, Steve, how can you use machine learning or maybe robotics for our cases? And could you please share how it's worked for your company? It's mostly about what is the next big thing in technology side, and plus for the Jorden and for the David, what is the regulatory problems?
Yeah.
Sorry, I just want to come back to this point on, this notion of building a reputation, a trust of a business or an individual using either AI or using the reputation based on a set of the crowd, if you will. I think it's one of these things that comes back to the old challenge of security, right? The cost of a false negative, right, or a false positive, and so you somehow the AI gets it wrong or the community gets it wrong, and you blacklist someone from doing business with you, or you block a transaction. And the thing about security is that usability and avoiding a false positive was always much more important than getting a false negative, and allowing a bad actor in. And I think the challenge with identity is always how do you as you try to decentralize, as you start to use a crowd, as you start to use AI, all these things are not perfect. How do you how do you balance that business cost or that reputation risk or the lawsuit that happens when you create that false positive? And secondly, just the speed at which new business are being started, getting online, and you want to allow the next new company to get on an Amazon platform or a marketplace, and they have no reputation. How do you build trust before they actually have been trusted by anyone? I think those are challenges that will remain unsolved. So,
yeah, I think the concept of a digital passport, right, that follows someone via their identity, that is, and it's decentralized from any particular network, so it's actually transferable, right, with you. Basically becomes like your reputation online. And there's always a first time, right? So until the first operation is going to be time consuming and lengthy. And then every subsequent one, though, can take much less time because now, there's actually some record of someone doing a transaction with you. It's like building credit, right? You get your first credit card or whatever. But I think if we take those points and then we start looking at, applying AI and then ML, I think there's, tremendous power when you actually decentralize. Right now, everyone is working with their own data store, right? AI is very centralized by and large right now. And ML, as a result, is also very centralized. But the thing that most people won't tell you is there's not enough data to actually do ML well, right? I mean, look at what's happening right now with the vaccine. We have all these different people, trying to find the vaccine for COVID, and everybody's using different approaches, and you read about llamas, and you read about, whatever, different approaches that people are taking. And the thing is, though, you can actually share data, right? And you can do that in a private way. And there are actually networks which allow you to use decentralized stores of data. Actually, Google is the one that started this whole process of federated learning. Federated learning, they came up with because they have databases that are distributed, and they didn't want to take all that data and put it into one location. Number one, the amount of data was too much for any one database. But if you have, if you can leave the data where it is, it's a lot less time consuming. When you had Google doing it, it was a distributed database, but it was one owner. You can use the same approach of federated learning with different owners of the data, right? So if all those different owners of data, think about all the different companies that are doing the pharmaceutical companies that are trying to come up with the vaccine, or the biotech companies. If they could actually share information and they could be cooperating and competing rather than just competing, they would have a lot more data in order to be able to make, a valid vaccine, right? Because you'd have that much more information. But, and there's a perfect example of this. There's a blockchain network called Melody, which is a blockchain network that is focused on drug discovery and use of blockchain. And it allows the different players, when you're dealing with AI, you've got data, you've got algorithms, and then with ML, you have weights. So weights are when you run your algorithms and you do training of the data, the models take on certain values, which are called weights. And so if you can use a federated learning model across a decentralized data set and you're not sharing data, you're not sharing the algorithms, people's intellectual property is protected. Yet if you're sharing the weights, now you can use that to inform your models in terms of what are quote unquote the right answer from a much larger data set. And as a group, you're going to come up with different outputs, different, because you have different models, but you're going to be able to actually use the proxies to that entire data set to come up with something that's actually should have a better answer. And this is actually what Melody is doing with traditional drug discovery, primarily in Europe right now. But this can actually be applied to solving some of the largest problems that exist. Rather than everybody using their own data set and their own algorithms, use community-wide, ecosystem-wide, where you protect that data, you protect the IP, but you actually have a cooperative and a competitive challenge to come up with a solution to a pressing problem. So that's what the current, to your point, Manana, I think that's what we're seeing is something incredibly exciting.
Yeah. Okay, David. What do you think? Yeah. And actually, and I have a question for you, person.
Okay.
What is your the investment strategy and forward thinking strategy for the next 6 months?
Okay, that's a great question. We have at Blumberg Capital, we're managing about $600 million. We have about 63 companies in our portfolio, and we're very much in lean forward mode. I'm feeling grateful and I'm feeling blessed because our firm was able to move into work from home very, very quickly. Early March, we all started working from home, and our portfolio companies, almost all of which are digital, almost all of which are SaaS model, selling to enterprises, they also were able to move forward quickly. So we didn't have to do a lot of triage and fixing. That was lucky. So we're investing. We've made 5 investments since the COVID crisis, new ones. 3 in the healthcare, digital health, telehealth related, and 2 in supply chain and commodities, but in the automation of the process, end-to-end tracking, intermodal, dynamic, using the data that can be structured to then use predictive analytics to give better insight, control, management, routing, optimization, all these things. And what is amazing right now is that never before have I seen large enterprises more willing, this is non-obvious and very shocking, more willing to go away from their traditional NIH, not invented here. For example, large freight forwarders used to almost always build their own software and have their own IT department doing everything. It's broken. They can't do it anymore. They need to go to the cloud-based, API-based, best-of-breed solutions, and they're starting to work with startups. And that's quite invigorating and validating for us as a venture capital firm. So all I'm saying is I think every crisis has its tragedy, and I have empathy. I'm sure all of us know people who have been personally affected or died. It's terrible, but there is very much a big silver lining, and the silver lining is this is a catalyst toward virtual. It's a catalyst toward more efficiency. It's a catalyst toward sharing data, as Jorden has mentioned, as Steve is doing every day as a practitioner, as Mihaela is working on as an investor as well. And we're seeing this need very highlighted, and actually now behaviors and practices of people are starting to change. We are becoming more digital, more integrated, more cooperative. So I have optimism ultimately. There's some definitely scary times ahead of us for the next year or so, but I think that we're going to come out of this more resilient is the word I'd use.
Definitely. And just to take on from here, technology is our salvation now, it seems like, and invented here or elsewhere. We need it for survival. That's why companies and large enterprises are now in adoption mode. So this is the best time for us technologists to unleash our power in the world and also save the world and make it more resilient in that way. And because, it was mentioned here about trust, I've been concerned, of course, from a philosophical as well as very pragmatic level with privacy, security, and trust. And now that technology is coming to the rescue also, and as a big believer in AI and in mathematics and in the right way of doing it, we can now defer the trust to the technology much more. And I, can say that we can ensure through, and blockchain, of course, with the trustless systems and so on, has brought this mindset in the world. So we, for example, at SingularityNet are also working on robot nurses, which do not get anxiety, do not get infected. They can work 24/7, and they are like computers crunching data in order to personalize the treatment on the spot in a dynamical manner. So speaking of trust, if you want the ultimate example that may work now.
I agree with you about the importance of taking care of data security, using machine learning to combat fraud and recognize information, and of course, structuring data. And I think it should be done at the most fundamental level than designing technical solutions. It seems to me that combining artificial intelligence, blockchain technologies, verifiers, and giving the user more rights to operate with their own data is the future in the field of KYC and KYB. After all, thousands and millions of hours are spent filling out paper and forms. Even today, then everything is digitalized. I think the industry needs an integrated solution that takes care of security and reduce the time it takes to conduct formal procedures. Just a couple of cases that this approach will give. A person can come to the hotel and check in 1 second with QR code and one smile to own device. Or new way to make shopping can automatically sign a loan agreement and receive the goods without payment in just one click. Everything is possible today.
Wow, great.
Yeah, maybe to add to that, I think those points of optimism from a technology standpoint, a lot of things that people were saying were impossible 3-4 months ago or would take 10 or 20 years are happening in weeks, right? So, you know, telehealth, for example, was limited to, you know, specific states. So if you were a doctor in a specific state, you could only, you know, provide guidance and recommendations to patients in that state. And it was, people have been trying for at least a decade to change that, you know, from a telehealth standpoint, saying, well, if your doctor is around the world or in a different state, you know, and they have the credentials, they should be able to provide you with, you know, recommendations and guidance. And people were saying it would take 10 or 20 years. Well, it took about 2 weeks, right, when the pandemic hit, for those barriers to drop. And now you can actually do telehealth. And that's been a boon to the telehealth industry. But I think for the, this whole, if you can't meet with someone in person, it doesn't really matter where they are, right? I mean, we're all over the world right now, and we're having an event. Usually, if you would do something like this, we'd all be local, right? And we would come together, and we would typically, or we would fly to a conference and do something like that. But now we can just be where we are, pretty much at home. And that part of it isn't necessarily great. But, you know, the once the pandemic is over, maybe it takes another year or so, and hopefully, and, you know, then we're able to, you know, reap the rewards of the fact that we had this acceleration process, but we now go back to a world which is actually operating on principles that are much more friendly to the use of technology and this digital first. So, you know, we're actually working on a company, and it's been accelerated significantly in the healthcare space. And all of our peers that we've been speaking with are seeing an 18 to 24 month acceleration, not decades in most cases, but usually an 18 to 24 month acceleration. And hopefully that stays, right? And even after we go back to quote unquote normal life. So yeah, very much in agreement with
yes, and we have seen,
saying.
it's called telework. We have seen now, I kind of organized the first conference on telework 15 years ago, when people were like, why would I need that? And now we have seen that it is our salvation. And, you know, it's not only for the nature and for our jet lag and, you know, well-being, but I think as much as we can do it, it will be done after the pandemic. Now we see the advantages.
Exactly.
Here's
Steve.
another example. I'm holding my digital wallet. I haven't touched cash in 5 months. I haven't gone to a bank. I haven't gone to an ATM. I use my phone all the time now. You know, I'm a venture capitalist. I work in Silicon Valley, but I was a Luddite. I had a wallet. I carried dollar bills and coins. Now it's, you know, I've come up to the M-Pesa Kenyan level.
Exactly.
Yeah.
Maybe you do like this, you short advice for the startups.
Sorry?
Yeah, give me please like the advice for the startups, how they survive. Yeah, like a special advice.
Yeah, I hate giving advice to startups because
It should be like what
I've
is
never
your
started a company. I always just kind of take over when someone else got a good idea. But I'll just echo a couple of things. One is this notion of digital first is absolutely it's exciting. It's really exciting, and you know, everything Dave said about the pandemic being awful is true. But from a technologist and a business point of view, it's truly a great time to be in our space. And it's that age-old thing. It's a burning platform to make change, and the burning platform when you can't leave your house or you can't get together. Of all the things that makes happen for digital first is exciting, and maybe it is this this digital first, and the thing that requires is trust and identity is the thing that accelerates blockchain adoption, or this notion of distributed organization accelerates, other forms of identity. But I think we'd all agree, we are, for good reasons, we are not all going to be working the same office the same. We're not going to be traveling as much as we did. We're not going to be carrying cash like we did, and we're going to. And so every trend that started over the last 3 months, for the most part, will continue to transform organizations. So I think if you got something that's in that trend, it's just a lot more adoption. And last thing I would say, I don't know what you guys are finding, it is so much easier to get on someone's calendar and get a meeting happen. I mean, thanks for allowing me to participate, but somewhere between last night and when I was doing a run this morning, I was now meeting with a great group of people, and that would probably never happen if we were all trying to get together in person.
Yes, exactly. Okay, Yuri, do you have a new special advice for the KYC community?
I think we should go beyond the standards models and look for new niches and new areas to apply existing technologies. In general, all technologies have been invented. The question is to find the right combination and search for the strategy where not only the startup wins, but all counterparties as well. Win-win strategy. We need something like that.
Okay, Jorden, maybe you have special advice for the investors, like the you from the Silicon Valley.
Sure. I think,
yes, and government, because it's completely different.
Yeah. I think, there's been a trend to say, well, Web 2.0, which we currently have, is good enough, right? And, people are making a lot of money on Web 2.0, but it's fundamentally flawed. And so we're basically locking in a broken system right now. And yes, people will continue to make a lot of money off of it. But the fraud and the cyber crime at some point is going to outweigh, the benefit to society. We're getting towards that tipping point. And so, if we just continue to go down this path, you can definitely invest and you can make a lot of money in the existing infrastructure. But it's going to kind of prolong this shift that is really going to be needed. I've been waiting, personally kind of a long time. I got into decentralization about 19 years ago, and really saw that was going to be the direction. I mean, the web when it started was pretty decentralized, and then it became more centralized. And then there was kind of a shift back to decentralization when we had the peer-to-peer revolution. However, in the peer-to-peer revolution, at the time of Napster and Kazaa and many of these things, you didn't have a trust layer, right? You didn't have something to make it trustworthy. And so you had a lot of fraud, and it kind of exacerbated and made things worse. With blockchain, we finally have the ability to go to a decentralized infrastructure, which is actually going to benefit all of us. And so I would say keep an open mind to blockchain and start looking at blockchain solutions as an investor. Maybe you don't make as much money immediately, but probably in 2 or 3 years, if things keep playing out the way they are, it's going to be a pretty exciting model. And it's going to start to provide a pretty significant competitive advantage. Not just in the enterprise, but in general. So I would say investors should keep a very open mind to blockchain and AI, and keep an open mind to what can happen in the next 2 to 3 years.
Yes, and I would say, to take on from here, both for obviously startups and maybe for investors as well, because they are there to support the startups, put mission and purpose first and make this world better. We have seen what happened with the centralized platforms, which I call the platform cartels. At the World Economic Forum, we have released the Presidio principles for ethical data use by the cartels eventually, but also in order to encourage new startups that are going to take care of this. So I would say for startups, develop tech that empowers people while keeping them safe in the context of this conversation. And for this, we will have to work at the nexus, yes, between privacy and transparency, and find that the sweet spot where we really can have people empowered and safe. Thank you.
All right, and I'll just summarize in a few points. Again, it seems contradictory, but it's a great time to be an entrepreneur. There are venture firms like ours, Blumberg Capital. We're very open and ready to listen to you and hear from entrepreneurs that are passionate and want to change and make things better, excuse me, and address millions of customers. It's easier to hire now than ever before in the recent couple of years. So you can find good talent that's been liberated, maybe sadly because they lost the job, but they're available for you, Mr. and Mrs. Entrepreneur. So that's a good thing. So there's capital available, there's people available, there are a lot of needs. And SaaS model is your friend. If you can demo remotely, and if you can have a low friction sales approach, that is awesome. We're looking for that. And again, we're finding in our early startups, companies that are making incredible traction in an environment where everyone said, oh, you'll never be able to sell for a year. No, that's not true. You can sell. Maybe not in the old way, but there are new ways that, and technology is your friend. You're standing on the shoulders of giants. Carpe diem, it's really time to try. And there are so many needs out there. I'm constantly amazed when I meet entrepreneurs that have a new solution. I say, wow, does that problem really exist widespread? And then they give me the TAM and they show me. It's quite amazing. So a lot of problems to be solved. Many of them deal with automation of the white collar economy. This is one of our major theses. Blumberg Capital, again, it has to do with AI. It has to do with things, new novel instantiations of automation, such as blockchain. Decentralization, again, is generally a friend. I think regulation in some ways is a wind in the sails of cyber and authentication companies, and yet it sort of has a wet blanket on entrepreneurship in general, and it tends to favor the large and incumbents. So I'm nervous about more government control. I'm very enthusiastic and optimistic about the entrepreneurial solutions and innovation that we're seeing. So thank you for this, Manana. A very great group of people to see every day.
Guys, it was so amazing for me. And see you next time. Thank you for your time.
Thank you.
Thanks, Manana. Thanks, everyone.
Thank you.
Great
Good
speaking
to
with
see you
all.
again.
Thank you so much.
See you at Davos next year.
Yeah.